Money laundering is a significant issue in Canada, impacting the financial sector and beyond. As a complex and often misunderstood problem, money laundering involves the disguising of illegally obtained funds as legitimate income. Canada, with its advanced economy and stable financial systems, is not immune to these activities. This video examines the scope of money laundering in Canada, the challenges in combating it, and the measures that have been and need to be implemented to address this pervasive issue. Money laundering in Canada has been a concern for decades, with illicit funds permeating various sectors of the economy. According to reports by the Canadian government and independent bodies, billions of dollars are laundered through the Canadian economy each year. High-profile cases have often highlighted the real estate sector, but money laundering also affects other areas such as casinos, luxury goods, and financial institutions. The real estate market in cities like Vancouver and Toronto has been particularly vulnerable. Skyrocketing property prices and a flux of foreign capital make it an attractive sector for laundering activities. Money launderers exploit these markets by purchasing high-value properties through complex company structures or representatives, thereby obscuring the true source of the funds. Snowwashing is a term that has emerged to describe the process by which launderers exploit Canada's clean and stable image to legitimize illicit funds. This practice involves creating or using Canadian corporations which are perceived internationally as reputable to disguise the origins of criminally derived profits. The ability to register these corporations without disclosing beneficial ownership information adds layers of anonymity, making it challenging for law enforcement to uncover the true sources of funds. Snowwashing leverages legal and regulatory loopholes that exist within the Canadian system. Despite recent efforts to tighten regulations, the legacy of these loopholes continues to impact the effectiveness of anti-money laundering measures. The international perception of Canada as a low-risk environment for financial crimes further facilitates this process, as foreign banks and businesses may be less vigilant when dealing with Canadian entities. One of the primary challenges in tackling money laundering in Canada is the complexity of tracking illicit funds across national and international borders. Financial criminals use sophisticated methods to move money through various jurisdictions, exploiting differences in regulatory environments to mask their activities. Another challenge is the integration of laundered money in legitimate businesses and financial streams, making it difficult to distinguish between clean and dirty money. This integration is often facilitated through industries that handle large cash transactions or have minimal oversight, complicating the efforts of authorities to trace the origins of funds. Moreover, Canada's regulatory framework has faced criticism for gaps in enforcement and coordination among federal and provincial authorities. The division of responsibilities between different levels of government can lead to inefficiencies and loopholes that launderers exploit. Canada's approach to money laundering is anchored in the Proceeds of Crime, Money Laundering, and Terrorist Financing Act (PCML-TFA), which sets out the regulations for financial institutions, money service businesses, and other entities. These regulations mandate that these organizations implement compliance programs, conduct due diligence to know their customers, and report suspicious transactions to the Financial Transactions and Reports Analysis Centre of Canada, FINTRAC. FINTRAC plays a critical role in Canada's anti-money laundering (AML) efforts by collecting, analysing and disclosing financial information and intelligence on suspected money laundering activities. However, despite robust laws and regulations, enforcement has been inconsistent. Critics argue that there is a lack of proactive investigations and that penalties for non-compliance are often not severe enough to deter large-scale money laundering. In response to growing concerns and public pressure, the Canadian government has taken steps to strengthen its fight against money laundering. These include proposals to enhance the transparency of property ownership to prevent launderers from hiding behind anonymous company structures, improvements in information sharing between federal and provincial entities, and increased funding for law enforcement agencies. Recent scandals, such as those involving major Canadian banks and real estate transactions, have prompted further government action. These include initiatives to establish more comprehensive data collection and analysis to better understand and combat money laundering activities effectively. Combating money laundering in Canada requires a multifaceted approach. First, there is a need for more stringent enforcement of existing laws and regulations. This includes not only imposing stiffer penalties for non-compliance, but also ensuring that enforcement agencies have the resources and mandate to pursue complex investigations. Improving transparency in financial and real estate transactions can also serve as a deterrent to money laundering. This might involve the creation of public registries that list the beneficial owners of corporations and properties, thereby closing a significant loophole that launderers exploit. Enhanced international cooperation is also crucial. Money laundering is a global issue, and Canada must work closely with international partners to track and prosecute cross-border financial crimes. This cooperation should include sharing intelligence, harmonizing regulatory standards, and joint operations against money laundering networks. Education and awareness campaigns are equally important. Financial institutions, real estate agents, lawyers, and accountants play a critical role in identifying and reporting suspicious activities. Training these professionals to recognize the signs of money laundering can significantly enhance detection rates. Conclusion. Money laundering in Canada is a complex challenge that requires robust responses from government bodies, regulatory agencies, and the private sector. While recent steps to improve the regulatory framework and enforcement are encouraging, ongoing vigilance and cooperation are essential. As financial systems continue to evolve, so too must the strategies to protect them from exploitation.